Hey guys, Joseph Henson here with Henson CPA Group. And we had a couple questions over clinic owners who were tired of working so much, feel like they didn't actually get a chance to enjoy the work they do and the lives they've started to build themselves. So this week we went ahead and we wanted to talk about how to build wealth as a veterinary clinic owner without working 80 hours a week. Again, I'm Joseph Henson with Henson CPA Group. So the first thing we really want to look at is the real goal isn't just about revenue. Most clinic owners are chasing top line revenue, but wealth is in what you keep, not just what you earn. So what does that really mean? Well, the more revenue equals more wealth. True wealth is your profitability plus your time freedom. What is time freedom? That is the time you have available to do things you enjoy. And that does take intentional planning. That is the key to true wealth. Not just how much you earn. You can earn $1 million a year, but if you don't have time to enjoy that, you're not really living. So, like I said, what is wealth really? Wealth is equal to time plus money plus peace of mind. So time, the freedom from constant clinic work. You should not be working 80 hours a week. I don't care what clinic you're in. I don't care if you're an associate, if you own the clinic and you're just the main veterinarian, you can't work 80 hours a week and enjoy that wealth. Money, the profitabilities, your savings, investments, retirements. And then peace of mind, confidence in your financial path. Wealth is what lets you say yes to a slower week or a family vacation without worry. If you can't go on vacation with your family because your clinic would have to shut down because you can't afford to have a fill-in veterinarian for the week, or because you don't feel that you can get away because no one knows what you do, that is a problem. Where clinic owners tend to get stuck. These are the common financial traps that I've seen clinic owners get into. They pay themselves last, or they don't pay themselves enough. What does that really mean? You're worried about making sure all your employees get paid, which you need to do. You're worried about all the bills you need to do. You want to reinvest in the clinic. You need to do that. But the problem is you aren't paying yourself enough at the end of the day. If you're making $1 million, but you see, hey, now at the end of the day, I got $10,000, that's not enough to live. You've been working 40, 50, 60, 70, 80 hours a week, but you don't actually get to live because that all goes to someone else. Running lean, but not planning for profit. So you're running really lean, you have a small crew, you're extremely efficient, but you don't know what to do when you get to the profitable area. No financial clarity, just checking your bank balance. Your bank isn't always telling the whole story, and it doesn't give you the entire picture. If you're not looking at your balance sheet, your income statement, and your statement of cash flows on a monthly basis, you don't know how your clinic is doing overall. But I have, $100,000 at the bank. Great. You also have $80,000 worth of payables that you have to pay in the next 15 to 20 days. So what are you really doing? Doing everything themselves. That is the fastest way to burnout. There is a reason veterinarians are becoming fewer and fewer. They're opening more clinics, they're opening more colleges, but it's still going to take time. You're 4 to 8 years out before really veterinarians start to see more of an influx in the industry. Right now, if you're trying to do it all yourself, if you're your receptionist, if you're the bookkeeper, if you're your accountant doing taxes, if you're the only veterinarian on staff, you will reach burnout. It doesn't take a long time. And when you hit that, you're going to find, hey, maybe there's things I should have done along the way. So step one, pay yourself first. Treat yourself like a necessary expense. What does that really mean? If you don't plan an expense, it becomes an emergency a lot of times. So you need to make sure you are putting a plan in place to pay yourself. And that's not just to pay yourself to get by. You should be enjoying what you do, and you should be able to take the benefits out of the clinic. If you see at the end of the year, we made $300,000, great. But what did you make? If you're not actually paying yourself, you're not reaping any of the reward. So the quick tip you can really look at is to set a baseline owner's pay at about 10 to 15%. If you're making $1 million as a clinic, you should be paying yourself $100,000 to $150,000. And you want to schedule regular transfers to your personal accounts. Your business is not your piggy bank. You have to make sure you are paying yourself just like every other employee. Now, I know that seems hard a lot of times, but when you start doing that, you do have a mental shift away from just an employee or an owner into the fact that, hey, I'm working all this time. I'm giving up time with my spouse, with my kids, with my grandkids, niece, nephews. What am I getting out of this? Getting that reward throughout the year makes it a lot easier instead of living off the very last bit, because it's never enough. It never feels like it's enough at the end of the day. And so you end up being the one who doesn't get rewarded. Step 2, know your numbers and don't fear them. Start with monthly tracking with your revenue, your gross profit margin, operating expenses, your owner's draw, and your net income. These are all things we end up helping our clients with. We want to make sure that what you're earning makes sense and that your revenue is in line with what it should be, your gross profit margin. Your operating expenses aren't completely out of sync with the industry. If you're spending 70% on payroll, yeah, your operating expenses are high just in that area. Owner's draws. Depending on your structure, you could have a salary, but you also take owner draws that are taxed differently. And then your net income. We want to make sure your net income hits a certain threshold to be considered a healthy clinic. A bonus tip, use your financial reports to make decisions, not just for taxes. Your financial reports are how you know what's actually going on in the clinic. And if you're only using them at tax time, then you're missing out on a key aspect of growth and comfort during the year. Step 3, build profit into your plan. The difference between profit first clinics and leftover clinics. So under profit first clinic, the owner's pay is preset each month, whereas the leftover clinic is whatever's left. Your budget under profit first is proactive, whereas with the leftover clinic saying, hey, whatever's left over, I'll make it work, that's reactive. Taxes, you're saving throughout the year. You don't need a surprise tax bill. And then for the profit first clinic with growth, it's sustainable and strategic. With a leftover clinic, a lot of times growth seems stressful. It's unplanned. You all of a sudden realize, I do need someone else here, but you don't know how to handle that because there's not enough left over to pay someone. So this is kind of a little breakdown of what an ideal clinic expense looks like. Payroll's around 40%. Your operating costs other than payroll will be 30%. Owner's pay is around 15%. Profit should be 10%. So if you make $1 million, your profit should be $100,000. And then holding your taxes out, so 5%. And I should say that doesn't go for everyone. That's just kind of a goal to have as a baseline. Step 4, delegate for freedom. You don't have to do it all. Not only do you not have to do it all, you can't do it all. You need to be delegating your bookkeeping, your payroll, your inventory management, and client communication. It's great to want to see how everything runs. It's great to say, hey, but if I don't do it, how do I know it's getting done the way it's supposed to? That comes down to your hiring practice. Make sure you have a great bookkeeper in your corner helping you with your month-to-month finance situation. And that goes with payroll too. You need to know payroll is being handled appropriately. Find an expert in payroll. Payroll is complex. Anyone who says otherwise either is lying to you or the only thing they do is payroll. Inventory management, especially in a veterinary clinic, you have to make sure your inventory is in line with what you need. There's a lot of things you have to be careful of. Certain drugs, medications are regulated, and you need to know that what you have on hand is what you're showing you're supposed to have on hand. Client communication, you can't reach out to all your clients. Make sure that you have good employees that are able to reach out, get reminders calls, check on the pets that you've been seeing, and just kind of go through there. Really, the big takeaway I want you to get from this is your hourly rate as a practice owner is too high to spend it on tasks that don't build wealth. I'm going to say that again because it's something you have to understand. Your hourly rate as a practice owner is too high to spend it on tasks that don't build wealth. If you aren't seeing patients because you're doing the bookkeeping, that's a missed opportunity. You could see 3 clients in an hour and make $600 to $1,000 easily seeing that. So not only are you doing a disservice to your employees or the accountant you have helping you, you're doing yourself a disservice because you're not focusing on the things that make you money. And that is one of the top things you need to do to get away from owner-operator to CEO of your business. So just a little recap on your wealth building checklist. Pay yourself first. You have to be rewarded for the work you're doing. You work too hard to not reap some of the benefits. And you have to make sure that what you're making gives you the lifestyle you feel you really need. Not always deserve, not always want, but the one you need. 2, review your numbers monthly. Your accounting changes constantly on how you're doing. You can have a month where you make $40,000 in profit, and the next month you have a $10,000 loss because you didn't account for an unexpected expense. 3, plan for profit. What are you going to do with your profit? Are you going to grow? Are you going to reward yourself? Are you going to look at finally hiring that second doctor you really need, but you never knew if you could afford? 4, delegate low return on investment tasks. Reaching out to your clients, bookkeeping, payroll, these are lower return on investment tasks for you as the clinic owner. They're extremely important to making sure your clinic runs effectively and efficiently, but they don't pay you to do them. 5, work with a financial partner. Whether that's us here at Henson CPA Group, whether that's someone else, you need to work with someone who understands your unique position and can help guide you along the way. Wealth doesn't happen by accident, guys. It's built intentionally. Well, as always, I'm Joseph Henson with Henson CPA Group. Our website's on the screen. You can email me directly at joseph@hensoncpagroup.com if you have any questions. We do specialize in all things accounting, tax, CFO services for veterinary clinics. It's what we love. It's what we know. If you ever have a question, feel free to reach out.